Hello, Warriors. Dale Pinkert here at TradeGate Hub. We're sponsored by TradeView, and today one of our regular guests, Adam Button's here at FX Button, chief editor at Forex Live at forexlive.com. Adam, I guess the headline that you want to start with right now is that you feel the inflation scare is over.
It is. It is. That's what I'm writing about today. That's what I'm talking about. And, we had two data points this week that were critical in CPI and PPI, and they're soft. The month over month numbers are softening. If you look at PPI out today, even go back to July, it's been about flat now for 9 months. We're just starting to roll over now that super spike in crude from March, April, May, June of last year. And there just isn't, if you look at what the bond market's saying, you go back a little while, yields have come down dramatically. And you thought, well, maybe that's a flight to safety on the bank crisis. But now it's sticking around. It's not, yields aren't going back up. CPI soft, CPI soft. The Fed, probably going to hike again one more time, and maybe that's it. And so, we've got 5% inflation right now. Bank of Canada was out yesterday saying 3% inflation in the summer. Fed probably around there as well. Once we get back sub 4, are we really talking about inflation anymore? Yeah, maybe it sticks around 3.5, a little bit stubborn, but is that so much a trade anymore? My inclination is, go ahead.
No, I was just wondering if, we always have to have something to worry about. In fact, that's why I take home positions, because over the weekend, because I can't relax unless I have something to worry about, Adam. So, okay, let's just say the inflation scare is over. What's going to be the next narrative? Could it be growth? We are going to see credit tightening up because of what's happening in the banks here in the US. I don't know if it's happening there in Canada, but I think they're starting to cut credit limits, and people are pretty maxed out on their credit cards. And in fact, I was looking at a sector, consumer discretionary, which is, that's the consumer, right? So they're discretionary dollars, not just, buying groceries and everything. And actually, it doesn't look that great. Let me just find it. XLY. Gotta be down here somewhere.
Well, that's all right. I'll talk what you said. You're bang on what you're saying about the growth scare, right? So, and I know you love an Axum, and so do I. And it's the generals fight the last war. So the Fed is fighting this inflation war right now, and they're not going to stop fighting it, and they're going to fight it for far too long. So it means they're going to keep rates too high. At some point, the economy is going to stumble, probably in H2, something like a recession or flat growth. And the Fed isn't going to cut, not until they're dragged, kicking and screaming. And, eventually they get there, but they'll be slow and they probably won't cut enough. So that just sets up a few years of poor growth, right? As the Fed keeps rates too high, keeps worried about inflation when they really shouldn't be. And, when rates should probably go down to, say, next year, 2 or 2.5%, they'll probably stay around 3.5%. And that's sort of the world we're going to be living in for a couple of years. And I think that's something like consumer discretionary is right to sell off. And, if you look at bonds as well, slow growth, low inflation, buy bonds. And so, it's all setting up pretty clearly right now for what that next trade is.
All right. The bond trade is interesting, Adam, because along with your, it's important, and you do this a lot, you marry fundamentals in the market with technicals, right? And so you just gave the fundamental argument of slowing growth that buy bonds. And if you look at this TLT formation, it's an ascending triangle right here.
Yeah, it's not going to make it.
So if it breaks out over 109, that could trigger a pretty good bond rally. I thought that might happen with risk off, that we break out and bonds go back to their old behavior of being a haven.
I think it is. I think it is. I don't know if it's risk off, or I don't know if it's a grind on inflation. It certainly looked like it would be risk off a month ago. Now maybe it's just sort of slow descent in growth. Maybe we get jobless claims continuing to tick up. all the little hallmarks that things are slowing. Yeah, maybe banks don't really pull back on lending too much, but they start to slow. I mean, it's all just happens at the margins. And you eventually say, things just keep getting worse. Now, on the other hand, it's like 450 basis points from the Fed or 5.25, whatever they get to, that's just ammunition for cuts down the road. And
Right.
I think that ultimately is going to be the better trade. Eventually, they'll get it that we're back in the 2010s. We all know the playbook from that. It's low rates. Stocks do well. Risk assets do okay. And eventually the dollar will fall. So we're seeing some of that right now. But the market is very hesitant to kind of pile into that trade because, maybe Australia doesn't do so well. So why am I buying Aussie? Europe's a mess. Emerging markets, yeah, okay, maybe, but let's see the commodity demand first and some pickup in growth. So there's just a lot of hesitancy out there right now about how we're going to get back to the low inflation world.
Yeah.
And I kind of endorse that. But, on your ticker there, I see gold a couple down. Another big day for gold here today.
Yeah. So if the inflation scare is over, what's the fundamental rationalization for gold? Just
I don't know
dollar hedge? A dollar hedge if it's
the
not
dollar,
inflation?
if we get dollar coming down, I mean, it's bonds, right? I mean, eventually you say, well, I'm getting 3 1/3 right now in 10s in the US. Not bad. But if we get a 2 handle again, well, maybe I'll just buy gold instead on currency weakness. And it's just China and Russia buying. I think that's the secular trend here is that not really this, I don't like this de-dollarization story, but China and Russia are buying gold. I mean, they're diversifying their reserves into gold, and in the Middle East, I'm sure they are as well. So I'm all on that trade. I mean, you got to get over 2070 and then we'll see, but gold's always a momentum trade. I mean, the gold bugs will pile in. You got to get that weekly up there. I mean, it's or monthly even. I don't know how far you got to go back to get
to see the old highs.
Yeah, I mean, I don't. Do you
We're
really want to pile in at 2040 when we're $30 away from some pretty big levels there? Now, I don't doubt that those are going to fall, but let's just wait and see. It might take a couple months. It might happen tomorrow.
Okay. Just little short-term caution when I pull up the daily. I know I'm the boy that cried wolf, but right now it looks like a possible 3 drive to a top formation up here in gold. I wouldn't be chasing it either. And see with this high in gold back here, we confirmed it. Here we're not confirming it. So,
and what's the real the tip to get it through? I mean, I don't know. Maybe it's weak retail sales tomorrow. Maybe that's something that gives it a fundamental kick. I don't know, but let's just wait and see. 2080 or 20 over 2070, and then we'll go from there. So, again, we know the playbook.
Could WTI, reignite inflation?
Well, that is sort of the question, right? And commodity inflation, that started it, and that's where it will come back. It's not there now. What really does 90 or even 100? Is that is that enough? I don't know. I think you got to get back to 120 to really get it cooking again.
Because gas prices are going up. Right? Yeah,
they are going up. But refinery cracks have come in a lot, right? So that spread between gasoline and oil is narrowing significantly. So that even with higher oil price, you'll see some lower price. Yeah, Natty is clearly bombed out. So there's more deflation coming there. I'm thinking about Natty now. I mean,
all right. Well, here's why maybe you should. It doesn't go back far enough, but this level that we have right here in Nat Gas, if you go back in time, and this platform doesn't do that, this level is held, I don't know, at least 4 or 5 times.
Yeah, $2. I mean, when you get to that 1 handle, it's pretty rough. I mean, there was talk about a 0 handle earlier in the year because there's just too much of, like 90 cents or something like that. And then you really get those production shut-ins. I think that's just bulls. Bulls love to think I want to buy gas and I would like to buy it dirt cheap, saying, I'd like to get oil at $40 or whatever, anything getting washed out. But, still need a lot of LNG in the future. So it's still that's the spread, right? US gas is $2, European gas is $13. And you put it on a boat, liquefy it, costs you $1 or $2, and you make the spread.
Okay.
And that's pretty compelling of economics, even
So,
where European prices are now.
so I know that the S&Ps are ranging, and you talk about looking through the recession trade. But when I look at the S&Ps here compared to how they performed with what normally would have been tailwinds, like a weak dollar would be
CPI
risk
even
on.
today. I mean, we're
See,
up barely.
and yesterday, yeah, yesterday too, we had good inflation news that
Yeah.
they sold it off. Here's just a little short-term look, a little shorter term, that the market really isn't performing that well,
No.
considering yields have dropped. Um, we've had a weak dollar. Dollar just made new lows, took out the mid-year lows. That's usually risk on.
Seasonals very
See,
bullish.
yeah. So I mean, are people going to be duped on that? Maybe it's risk on for everything but the S&Ps
Well, it's
in
interesting. I mean,
April.
okay, how much, what was it, October or November CPI? Or I think it came out in November, it was October. How, and it was a little bit soft CPI then. How much was the NASDAQ up in one day? 7%.
Yeah,
7%. It was like a couple ticks lower. Yesterday we got CPI soft on
yeah,
the details, and how
yeah.
much it was down, right? And
Right.
same today, PPI. Yeah, we're trying to rally a bit here, but this is certainly not 7%.
Yeah.
And yeah, all those things you mentioned as well, not going up on any of that. Yeah, and I think some of that's, yeah, these discretionary worries, the consumer worries that the Fed is going to stay too high for too long. And and then even beyond that, like, so they stay too high for too long, then they cut, but still stay too high. And they're just perpetually too high for the next like 3 years. And you get, instead of maybe grinding out 2% growth, you're grinding out maybe
Negative.
1% growth in the US, or you're just skirting recession the whole time. And there's no help from Congress anymore, right? Spending's done. Chances are next election you probably have some split, like odds are always on a split, right? So you had nothing, no spending, no knight in
It's
shining
all
armor.
up to the Fed now because there's no fiscal stimulus coming, even though they really overstayed their welcome.
Oh, that pipeline is still there this year, right? But then next year, year after year after. So you're looking at that in stocks, and then you have, but I think that the AI story is so powerful for margins down the line on
Oh,
stocks. I
okay.
think
Yeah.
it's just, you lose so many employees and your margins are incredible until there's no one left to buy your things. But
Yeah.
maybe that's probably a
Well,
2030 thing.
someone posted an article. I just scanned it, and it was really measuring trading performance by AI compared to a human that has some discretion and experience and some wisdom. And actually, being human was an edge when it came to trading on a performance level. It's like you and I could rest. We might be replaced, but our profession,
It
I've been
will be
replaced,
interesting.
you know.
It will be, like, if you look at the pandemic trade, right? I mean, the AI wasn't going to spot a pandemic on a chart. And
Yeah.
so there was an opportunity there to step in. It's all the same things. It will be. I mean, if you had an AI that worked, you wouldn't share it with anyone. I guess that's the story, and I'm sure they're out there.
I mean, as you can tell, I
I
keep
mean, we called them algos before. I don't want to just
Yeah.
change the terminology because half the companies out there right now. I was using like a image to text. Sometimes you get a screenshot of something and you want the text, so you can put in these little converters, and it takes the picture and turns it into like text you can copy and use. And they call that an AI now, right? It's like, so every
Right.
company that's technology is now AI, right? It's the buzzword. So
Yeah. I could use some artificial intelligence when my natural intelligence is lacking. I look at things like this, and I keep drifting back to the market, but deer and cat and Apple's up today, but it could be peaking. The semiconductors, lead.
let's talk
Isn't
about
this?
that.
Yeah, isn't this really? I mean, if there's going to be a dollar rally, I try and think what could bring about a dollar rally. The only thing I could come up with is a big risk off play in the market where people will come back to the dollar.
Yeah, and I think I don't see it either. I don't see these huge moves brewing right now until we see people start to cut. Like maybe there's some, something happens in Australia in the housing market or Sweden or something, and they have to cut rates dramatically there. And you get these country specific trades starting to happen and this like kind of macro divergence. You talk like another one, McDonald's, though, if you pull up, for instance, that is up like, I don't know how many days in a row just on a heater, right? And that's probably something like the AI trade because they're seen as the winners. They have all those screens when you go into a McDonald's. You're going to be getting rid of all the staff there soon. And it's trading at 6 times sales or something like that. Like it's stupid right now.
Mickey D's. Yeah, look
But
at that rally.
if you eliminate all the staff, I mean, how profitable is McDonald's operation? Like that's an insane run.
Yeah, because they're getting 20 an hour, I believe now.
Yeah, well, exactly. And if everyone's getting 0 an hour, you're running McDonald's with 3 people. I mean, what are your margins?
Yeah.
But then, okay, so Cat and Deere, and I'm thinking a lot about this today. A little copper company I follow got taken out today. It was
Copex?
Called Copper Mountain.
Oh,
but
okay.
CMMC.
Okay,
And it was,
you've been real right about copper, Adam. I mean,
well, so we talk about industrial. Like you're showing Cat, you're showing Deere, right? And I'm looking at this little copper company, not a well-run company, but they have like 30 years of reserves. So if you want to pull it up, since I'm talking about it, CMMC is the ticker, so people can see it. But
my charts seem to be frozen.
Okay,
so,
well,
anyway,
just have to animate it with my hands. Anyway, it got taken out today, all stock deal, 20% premium or 25% premium. So like not a great deal, right? And it's copper still trading at 4 or above 4 here now. Like EV to EBITDA was like 4 or 5 times. Like the company had no debt. And like, if we need all this copper for the green transition and everything else that's coming.
Yeah.
And yet you see a copper proven reserve, 30 years operating mine getting taken out with a minuscule premium and no money. You talk to people in the exploration space, like the cost of capital for a copper explorer right now is infinity. There's no money, and so you see Deere and Cat, like the investments going into like industry, into hard assets are just garbage right now. And it makes me more bullish, right? Because you eventually, if you don't invest in things,
you have no supply.
Yeah, exactly. And I'm just shocked because sometimes, you get in the internet right now, and as traders, you get into whatever echo chamber you're in. And so I follow a lot of copper, oil, raw materials, industry, because I think it's the next trade. And you start to feel like everybody knows the trade.
Yeah.
Like, and once everyone knows it, it's not a good trade anymore, right? But you can get into an echo chamber and realize that, well, the rest of the world still doesn't know. And you get an event like this company getting taken over for nothing. It shows me it's still early innings in that trade. And again, a lot of people who want to buy it are waiting for the recession, right?
Yeah.
And they want, I want to buy a copper company, but not till copper's at 250.
Or a lot. Okay, I'll tell you what I'm waiting for. S&P's 3,200 to buy the world.
Yeah, well, listen, I kind of, it's so hard to tell when to buy it, right? I like it. I want that trade. I'm scared of missing it, but I don't mind sort of taking a bit now and taking a bit more on the way down, because I think I have this confident view that, generative AI is going to lead to a lot more productivity.
You don't think you think that the October lows are it? And I mean, that there is a case, no?
I mean, we'll see, like the recession thing. And I think it's the investor psychology, right? Okay, so we get a recession. Everyone says recession is going to be like the financial crisis. It's going to be brutal. And it might just be a shallow recession. But the Fed might be stupid too and keep rates here for way too long and just submarine the whole thing. So,
seems that way.
And you kind of almost seem to have a market kicking and screaming to get the Fed to wisen up. But then once in a while, the Fed says to itself, we're going to show the market. We're not going to react to the market. We heard Austin Goolsbee, the new Chicago Fed, he was out there. I'm not going to get pushed around by the market. Like eventually they do though, right? Because they always say that. And then eventually, they fold and they cut and blah, blah, blah. So
don't you think to wait for emergency levels in the market, like 3,200? you
It's a
know,
long way down, Dale.
it's 20-30%. I mean, that would be an emergency for them to cut. Aren't they going to pause before they cut?
I can see it in some, like a lot of this growth tech is still trash. A lot of these
Yeah.
companies they're basically zeros. They don't make any money. You've had big comebacks and things like Facebook. Well, Facebook makes money. Microsoft makes money. Apple makes a lot of money. But, half the NASDAQ, not half, but there's a good chunk of it, including Tesla, that is still rich. Nvidia got rich again. Maybe it stays rich. I don't know. But I'd like to see that sort of wash out. That would be maybe the time, like a Tesla. It's kind of been a 50% retracement in Tesla.
Yeah.
Right. And Elon Musk, probably not the best for the business right now. So if I'm short, I think I want to be short there and just stay long the rest. But
and how about geo risk? People have been pretty confident about, what the Ukrainians have been doing, and it's gridlock. What if Putin starts to make gains in Ukraine?
Well, and yeah, I mean, I wanted to ask you, because you seem to be dialed into some alternative ideas there, Dale. These leaks, these intelligence leaks, and I don't know if you've seen the Washington Post story today, and it talked to like a kid who was in the Discord server where it was leaked. I don't know, something just smells fishy about this whole thing right now. This war there's just a lot of disinformation out there. I don't know what's true. I don't know how bad the Ukrainians.
They say Biden hit a reply all on an email and it went to everybody.
Well, I just don't know what's true anymore. Maybe Russia,
exactly.
Every time Russia's suffering, Russia's about to collapse, the whole thing. And then, the Ukrainian loss, I saw in this leak, Ukrainian losses are 15,000 killed. I'm thinking, man, you gave up like 20% of your country for 15,000 loss. Like, that seems awful low to me. And this is a real leak. Like, I just don't know what's true in any of it. And I think about the First World War, right? German people at home, I thought they thought they were winning. They had the summer offensive. They got closer to Paris than ever. And then everything fell apart and they lost. And like, they didn't see it coming. Like, the average, everything was propaganda then, right? In the newspapers.
Yeah, right.
And it just seems like maybe it ends like that. I don't know. The history of war is immense, and wars end in all kinds of different ways. So it's strange. But Urals oil right now is spiking. So that's that capped oil, Russian oil cap at 60, it's trading 68 now.
Okay.
Oil's going up. They're tightening the market. Maybe Europe starts to say, listen, enough of this. We don't need, or gas there starts to go up again. And
well, don't you think Macron is already kind of already said that when he went at his meeting with Xi to be less dependent upon the U.S. And the dollar?
They must be like everyone else, right?
He should have been on a fire hose on the streets of Paris.
Thinks this war is I mean, they got their own problems. I don't even domestically, it's so bad, but everyone thinks this is a dress rehearsal for Taiwan, right? Everybody thought, well, China's going to do Taiwan, we'll do the same. And he's trying to draw a line and saying, listen, if and when that happens, like Europe, we're not getting in the middle of this again. Like we're in the middle of this Ukraine, it's hammering Europe. It cost us so much money for these energy subsidies. And, the US is just making a boatload on LNG. And if we do this again with China, Europe we can't afford to do that again. And he's maybe laying the groundwork for that. But a lot of German leaders tried to do the same before the Ukraine war and said, listen, we're not going to supply any weapons. We don't want to escalate this. And then, they basically put up a wall between Russia and Europe now that's going to cost Europe for generations. And that's fine. I mean, that's the price you have to pay for defending freedom, but it isn't costless. And I'm not sure Europe can afford to do it forever.
All right. Well, switching
is there
back
a trade there?
Who knows? Yeah, it's a who knows. But I did hear a somewhat of a disturbing analog, and maybe you could confirm it, that the Fed stopped tightening a year before the GFC. It took a year and they were on pause, and we had a GFC. and they haven't even started to pause yet with weaker everything compared to then. Weaker everything compared to then. So what we've gotten from the Fed hasn't even really, except for I saw a chart on M2 money growth,
Right.
where it's completely collapsed. It's never been lower. We used to follow M1, M2 on Friday afternoons. It was a big deal for us in the,
Yeah, that is a
pre-internet
little before
days.
my time.
Yeah,
That's the old
okay.
Milton Friedman trade.
Yeah, so what does M2 mean to you that it's dropping off the chart to the bottom right?
I mean, that's sort of the start. I mean, in terms of analogs, like I'm an analog guy, but I'm not an analog guy. I feel like in same as the social media bubbles we get in, there's so many analogs. They seem to look nice, like,
Yeah.
the market's never gone up when the Fed stopped hiking, or whatever. You overlay the ISM over so and so, and it's a recession, the stock market has to go down 10 out of 10 times. And I'm not there. Like, I just see so many. I don't believe in analogs like that. Now, to your point
Well,
about
that's a
money supply,
measurement.
yeah, no, I get it. Some of them work and some of them I believe in, but I just feel like I'm just inundated with bad analogs. And not to comment on that one,
Yeah.
but more about and your second part about M2. Again, I think it just means the inflation trade is over. I think
Yeah.
the credit growth is going to slow. Yeah, there's
It
some
implies
wage stuff in the pipeline.
outright deflation, that M2 money
And
supply drop, doesn't it?
And our people, I guess I worry about wages and demographics. I think aging can be inflationary. But now if you take like sort of your generation, right? If they're retiring, they just went through this inflation scare. They're going to be tighter than they would have 2 years ago.
Yeah.
You start to worry, you take less risk, spend less. So that maybe it isn't as inflationary as I thought, baby boomers retiring.
My
And
father-in-law reports price increases from the grocery store every time he goes. Oh,
and
eggs were up another quarter. Oh, I mean, he's in tune with every nickel
it's like
price increase.
everybody feels it, right? And so you say, well, I'm going to spend less, especially if you're on a fixed income. And that ends up being deflationary, disinflate. So you just go back and I'm just thinking a lot right now, like, what's the trade? And I think
What is a trade?
it's just stocks. I mean, it's just the AI
Okay.
trade is going to be good, low inflation, Fed goes back to 2. I mean, that was the 2010s trade, right? But I think you got to layer over it value and industrial stuff, because there's just not nearly enough investment going into that for what's going to be needed. And I'm open to the idea that I'm wrong on that completely, because it just seems like such a layup. You don't often get these trades where you think, well, this is obvious, and then it works because it's obvious. But it's obvious to me what's happening. But I guess it wasn't oil. I mean, when it got to $20 and people say, well, oil's just going to go away. I mean, it didn't make any sense. We're still using it. And even Warren Buffett yesterday was saying we're going to need even more oil in 5 years. That's why I'm buying these companies.
Yeah. Okay. So oil, you follow any agricultural markets?
I mean, a little bit of the fertilizer trade was sort of an interesting one last year. But that's
lithium. You're very bullish on lithium because of the problems of getting a mine. They just can't get past the regulation to open a lithium.
All mining. I think it's a better trade in metals, though. The problem with lithium is you do have to worry about technology, right? There are a lot of smart people. I mean, lithium, we've had thousands of years getting copper out of the ground and finding it. Lithium's in a lot of places. It's in seawater, it's in brine under the ground, it's in rock. We haven't put the best and brightest of the world with unlimited resources at the idea of extracting lithium.
Okay.
And the bottom could fall out. It's an all or nothing trade, because it's 15 years to open a lithium mine. And by the time the price goes 10x, you can't bring on supply. So it's like an infinite value of some of these producing assets. Or they find something that does it better and cheaper for a very low amount of money, and the bottom falls out of it all. So I think on a risk reward, I like that trade, because you buy a company, it can either go up 10, 15x or 0. So your odds are kind of like 15-1. And I think it's like even odds. I hate to bet against technology, but you get 15-1 on something you think is even odds. I do like it.
Okay. You like copper miners more than gold miners?
Yeah, I mean, the gold mining space is very fragmented. Copper mining, again, it's more a question of I like explorers, small producers, or mega
Okay.
caps. But I
What do
think
you
for most
do?
people, the big
What
ones.
do you go out into the exploration space in
Well,
copper mine?
I mean, that's out of my pay
Is
grade.
that, I mean, are you trading on Vancouver right now?
I like
Adam,
I
you on
like
the,
it. I
huh?
like the
All right.
idea of it. I like the
Micro
idea
cap
because the torque,
Vancouver.
right? But
Yeah.
that's just greed. That's just greed. I think you do better to just pick the big ones because they can execute. But the small producers, I think the problem is they're getting hammered by inflation too. So
Yeah.
every quarter they report, their costs are too high.
Because of
And
oil,
yeah,
mainly
diesel, right?
energy, right? So, I mean, they should have some good quarters
Well,
with the oil having come down from 120 to 60.
presumably. Here's a stat that I didn't know until recently. 10% of all global energy is used in resource extraction.
Wow.
So, it's a ton of diesel and
Yeah.
energy to break rock
Yeah.
and to get things out of the ground. So,
Yeah. So, but more energy than a Bitcoin miner. And do you
well,
believe the breakout over 30,000 is real? What's your outlook for Bitcoin?
yeah, what's going on in Ethereum today? I'm not up to date on that. Nice 5% move, but I like Bitcoin. I don't like anything else. I mean, this move from 19 to 30, it was so fast.
Quick, yeah,
And I think just
impulsive.
on the psychology of it, a lot of people might have gotten left out, right? So there's
Yeah.
going to be some FOMO brewing out there, and it's a psychology trade, Bitcoin. So if it gets going here again, and similar to gold, just pile in. But I don't know about the rest of the space. I just don't
Okay.
see any money coming into a lot of these coins
New
to do
highs in
that.
Bitcoin, Adam, in the next couple of
Nah, I
years.
don't know. I don't
Yeah.
know. I
But you
mean,
just like it. You said you want to be long Bitcoin against other stuff,
the rest of the
but
field.
not Ethereum right now.
No,
Because
I
that
guess
one,
not. I mean,
right. So,
maybe today's the day to get into it though, because I don't know.
yeah,
But I mean, there was what? Is there some kind of like
I don't
upgrade to
know.
Ethereum?
There
I thought I saw some
maybe
headlines about
a
that.
fork or a knife or a spoon. I'm not sure.
Ah,
Uh, Anyway, Adam, best idea. Let's see, we're, mid-spring right here. What are you going to be looking to do going into next week?
we'll see what retail sales is tomorrow. Soft retail sales. I'm thinking about the short Tesla if I'm negative on risk assets or even as a hedge.
Yeah,
On otherwise, I like dollar yen. I think it's still
buy
a
this dip.
great trade. I mean, the technicals line up pretty nice.
Yeah,
You have, yields are coming down, and I think inflation's over, but it's going to be a slow process.
okay. Adam Button, former journalist, one of the best news traders on really the planet, and a great analyst. So thank you for edifying our community again, man.
This was a lot of fun, Dale. Thank
Yeah,
you.
I always love batting the ball around with you, and I root for you and all the people that hear your voice.
Well, likewise, Dale.
All right, my trading
Absolutely.
warrior brother, Adam Button, everybody. Follow him on Twitter at FX_Button. Read his stuff at forexlive.com. And they do a great job prepping people for the markets. Thanks again, buddy. Have a great weekend.
Wonderful, Dale. Take care.
All right. That's a wrap, everyone. Hope you enjoyed Adam. You know where to find him. Find him. That's my advice. And
Right
have that be part of your intelligence gathering for different narratives that you may have, and keep an open mind. It'll keep your account open. Don't you think, bro?
Love it.
Take it easy.